Welcome to TradeTheMBI.com. This is John. This report is for the 8th of May. And well, we talked about it, and it just seems like it's an automatic when we were discussing the continuing rising shakeout and the fact that we were approaching the 5th of the month, and we expected funds to start buying in, and they did it the previous day every time we came to the ABM yellow here. And sure enough, then price just started moving higher, and there was no way to stop it. And of course, there was enough short in there with this cyan above zero that caused significant enough short covering. Now we've got a nice crossover. We had the reset of the orange, so potential new buy setup coming in here at the peaks. Now obviously we're a little overbought at the start of the day, so it'd be worth checking intraday to evaluate where best to go. You can see the NASDAQ has been in much better condition than the S&P broader market, but also extremely overbought throughout this entire setup. And that's not a surprise, though. As long as you have new money coming in, this can sustain itself. And this is where we look at the shakeout for those specific readings, as well as the fact that you still have short-term buyers at the bottom here, meaning they are not out of money yet. So obviously Macron wins, and no surprise there for the market, but it has certainly propelled the euro back up to, well, it's just more right in the middle of the range that we expect. This particular point, it has completely eliminated fear of euro breakup. You have talk now of debt relief for Greece. These are all positives for the euro, which actually helps the U.S. market. So that actually should provide some relief. Bonds, holding up pretty decent because the weak numbers coming through, the fact that the Fed indicates that they're still going to raise rates, though there's been some chatter in the last days or two that who knows if that's going to be a continued policy, given the fact that they nearly drove the economy into negative growth with their last couple. So they leave it to they really have the ability to actually undermine the economy even more and make things worse, because again, just because there was the Trump effect, the fact that you still haven't seen anything significant pass. I know there was the big fanfare of the healthcare, which is kind of bizarre to me, because just because the House passes something, that's not really anything. I mean, it takes both houses to pass something, and they're nowhere near that point yet. So extreme oversold for oil here has caused a little bit of a bounce back, and they're just going to test this low area right back up here. That won't be too big a shock, but we've reached a significantly oversold where you typically get a little bit of a bounce when you get into that minus 23 range with the readings. It tends to give just a nice bounce back. It happened last time over here as well. Whether it's a sustained push, unlikely, because at the end of the day, you have a massive amount of production capability and low demand. And until that demand side gets filled in, and that's when we'll know that the economy is functioning and we're moving in the right direction. If you do actually see the healthcare change and the taxes averted, that is going to be a boon to business. That is going to definitely spark some hiring, because I've said from day one, when that was almost 8+ years ago when they did Obamacare, it was crippling for business. As a business owner and someone who understands how those things work, you would not hire anyone given what that structure was, and it's exactly what it created, despite their claims to the contrary, and it just really crippled the economy, and I think has led to more of the stagnation that we've seen, rather than some of just the lame spending and policies that we've seen. So that has been the crippling force and drawback to the economy at this particular point, and if it does actually change, then you will see some more positive movement. Gold is now reached our base point here. We're going to be looking for the signals for the turnaround crossover. We need to see that orange break down further in order to get a reset completely. This particular point, though, anything above that 119.34 all the way up there is your turnaround point. It's too early to just automatically, arbitrarily go in just because you had the oversold, that shakeout continuing to decay at that level. Just means they're fading it now for the next resurgence. So here was the 5K, and this was such a straightforward one. Buy signal came in right about here with that dip below. Number 5 shows up above the ABM. always safe place to take it, and it just popped up from there. And it kind of stayed flat. We were just in a no man's zone, and then the shakeout went back to positive right over here. Another number 5 with this step below, and that was it, and we were off, and that was a significant, plus 12 points or more on that move. So not surprising. That was just the funds set it up on the dip from we had the last few days. They bought all of it, and then with that extra inflow at the beginning of the month, boom, pushed to the top, forced some short covering, and that's usually a bit more dramatic. We're easing off back on that. We had a lot of positive extremes, going all the way back to right over here. So the potential for moving back to the 2392 range. But again, like I mentioned before, once we get to the 2080 something, 83, 84 range, that the move to 2400 was more likely than anything towards the 350 range. And sure enough, here we are right back. We popped the 24. Couldn't quite hold it yet. It's got to fill back in a little bit, and that typically happens when you break those key points. So all in all, markets moving very close to that 2450 target was the original one, between 2450 and 2550. So all good, and right on top of it with the readings that we've been seeing. So as always, though, continue to look for me on the Skype chat. We'll post up charts as warranted. Trade well.